A very good afternoon. I think it's going to evening. Welcome to E-RAH Excel. So I'm going to show you this trade I took. It was a New York session there at 3, and then I took this trade. I'm going to do a breakdown of this trade here that you are seeing here, this trade here, and the reason behind why I took it. So remember, I made a breakdown in the earlier in the morning because the market was kinda here after here, and I told you we are going to wait for a confirmation for the market to push back up. So this happened earlier in the morning. It was at 9:45. We missed this move. It moved up to here. So I didn't take this sell trade because I was off the charts and I'd set my take profit. I'd just come back to look, and it was a nice sell following my system. So let's make a trade breakdown. So as we go to, because I use higher time frames for my buyers, and I execute mostly in higher time frame zones because they're powerful and they hold the market compared to the lower time frame zones. So how I got this move, I just applied only a few things to get my take profit. I used this model here. This is a left shoulder here. This is where I put my TP because I knew this one, it would affect the market to push the market further down, this left shoulder here, because it wouldn't go up here. There was this left shoulder here, and you can see that left shoulder. What's a left shoulder? A left shoulder is if you if the market is going like this, like that. So the market makes a market structure shift, then we expect the market to come tap there, and it's going to deliver here. If the market makes this market structure shift here, this one, it's a change of character here, we know that, and it leaves this shoulder here, this left shoulder, we know that market is going to come back, and it will, this left shoulder here, market will tap it and it will push the market further down. So for me, my bias was there, since I was a New York session person, I waited for my New York and I executed my trade. I executed that. It was at when New York had just opened. The market was just opened. So let's make a trade breakdown. I was in 15 minute time frame. Sorry for that. It's taking long to load. But I'm going to show you the trade breakdown, how I got it. It was in 15 minutes I observed liquidity, and I went into 30 minutes I observed my point. It was 30 and 1H where I executed my trade, and I used also 1H to exit the market. I used 1H for entry and 1H for entry, but I used the 15 minutes liquidity. Okay, so here I used this is the 15-minute time frame. I used this 15-minute liquidity, which was positioned here, which was the last swing high, the last swing low that broke structure here, so which was this swing low, and to get the cost, so this swing low was valid. So because the market had already moved, was already like here, already making break, had already made a break of market structure, BOS, from here. So we expected the market to come back and sweep this liquidity and push the market further up. I went to 30-minute time frame, and I saw there was this zone here, which is an open and close gap, which was fresh. I wouldn't take this zone, I wouldn't take this open and close gap because it was near, it was not fresh. I took this because it was fresh. this one here, it was fresh, and this zone here wasn't fresh on. I think it was this zone. There was no zone here. The only zone which was there, it was this open and close here, but it was not fresh. But there was the 30-minute open and close, which was, 15-minute open and close, which was fresh. So I saw it ideal that the market will come back there. After that, I took my trade. I placed my trade here, then I put there. I wanted to go up to this zone here, but I remembered this zone here above there. But I saw this on H1. There was liquidity. There was my left shoulder which was being formed, and those left shoulders are powerful zones. So I just had to chill my TP here, and I move with that, because I knew it would cause the market to shift to go down. That's what happened, and I wasn't prepared for it too. Yeah, but currently we are seeing that market is rejecting some zone here, and it's rejecting this zone here. There is a zone here which is a support. It's being rejected, and if we get any 15-minute break of structure here, like here, we are going in for a buy. If the market comes and closes above this zone, let me just put it. If we see the market come, close above, we shall expect it to come there, and we shall push up. Yeah, there, because we are seeing that market is rejecting this level. And also, if we close another way, but this is my secret entry point, if we see a bullish engulfing candle, because it has rejected a useful zone. If the market closes above a useful zone there, and it makes the problem here, it means it's going to take a while for it to turn bullish, because of this candle here. This candle is kind of big. It's big. If it was small, like let me say this, and it made a bullish engulfing candle, here I would enter, but here it would, this, like, we want something. If it's like something like here, it will be ideal for us to push up. But here there was no significant level, so even if it made that and there's no significant level, we shall not consider it a good entry point. But you see what happened here. I think it was at 9. Yeah, this one, the problem with, there is another one broker I use, like this trading view thing. The one I was using, it made a bullish engulfing here. It covered this whole candle here. It was ideal for us to push up. You see, even it was in a very good zone. You see, even here 15-minute, it made that. So someone would just enter from here, you target, because there's some significant level there. Okay guys, thank you. Have a nice trading day. Hope we shall link up next time. For more content, follow, like, share, and yeah. And in the description there is my number. You can contact me, and my Telegram channel. You can contact me and we link up. Thank you guys.